Welcome to LUMA Health Insurance Explainers, where we break down the ins and outs of insurance for you. Most people buy insurance because they don't want to pay at the hospital. So when you see terms like copay or deductible in a plan, it can feel like a bit of a contradiction. But if you're looking to lower the yearly cost of your plan, what we formally call your annual premium, these are actually the most powerful tools you have. Today, I'll show you how to use them and why the language changes, depending on where you are. First, let's clear up the terminology. In the US, there's a very strict legal difference. A copay is a fixed dollar amount, and coinsurance is a percentage. However, in almost every other international market, there is no strict distinction between the two. Whether your policy says copay or coinsurance, it could mean a percentage share or a fixed amount. In most countries, the terms are used interchangeably. For the rest of this video, I'm going to refer to both as a copay. Just keep in mind that you need to check your table of benefits. That's the document showing what your plan covers, to see if your specific plan uses a percentage sign or a fixed dollar amount. That's the part we're talking about. To choose the right plan, you need to understand how these three options actually function. A fixed copay is usually a small flat fee you pay per visit, like $20. It's predictable, but because the amount is low, the discount on your premium usually isn't that significant. A percentage copay is where you agree to pay, say, 10 or 20% of every bill. This can lower your annual premium quite a bit, but you need to check if it applies to outpatient care, OPD, inpatient care, IPD, or both. Then there's the deductible. Think of this as the gatekeeper. It's a larger amount, like $1,000, that you pay first before the insurance company pays a single cent. While a copay applies to every visit, the deductible is a threshold you have to clear for each policy year, or in some cases, for each new illness. Now, there isn't one perfect option here. It really comes down to your specific situation and what you're comfortable with. A fixed copay provides maximum predictability. You know exactly what your out-of-pocket cost will be for every visit, which makes budgeting simple. The discount on your premium can be decent here, but it really depends on the specific medical usage, like whether it triggers for every minor outpatient visit or only specific treatments. Percentage copays typically offer a much better discount, but if you have a massive hospital bill, that 20% can add up quickly. One advantage of a percentage-based copay, though, is that you can actually control your costs. If you choose a good value hospital instead of a premium 5-star facility, your 20% share becomes a much smaller number. With a deductible, you don't have that flexibility. A $1,000 deductible is $1,000, regardless of which hospital you go to. However, very high deductibles, which can range from around $5,000 to $10,000 and go up to $30,000 or even more, are where you find the biggest savings on your yearly cost. This can be a great strategy if you're healthy and just want protection against catastrophic events, the big unexpected things that could break your budget. It's also a smart move if you already have a basic local insurance plan or a small policy through your employer. You can use that initial insurance to pay for the small stuff, which covers your deductible, and then your private health insurance policy kicks in for the big bills. You get full coverage while paying significantly less for your private health insurance policy. Finding the right balance between these options is how you build a plan that fits your budget without leaving you exposed. If you're looking at your table of benefits and aren't sure which path is right for you, reach out. I'll see you in the next one.